this week. What are we on? Facebook, Twitter, YouTube, and Instagram, I think, as well. I think I have to go click a button to go live on Instagram here, but I gotta
Yeah,
figure
maybe
that
we
out.
can figure out Blue Sky and all.
Yeah, yeah. But yeah, if you want to give me an idea of what we're talking about here today.
Yeah, I think it'll be a fun one today. So we were talking earlier this week, looking at employment payroll numbers. Obviously, those were released earlier today for Canada. U.S. employment numbers also released today. Probably talk a little bit about in more detail the monetary policy report that came out with the Bank of Canada update when they last did the interest rate announcement. The Canada Spring update, just talk a little bit about that. I know you have some comments about housing, some of the initiative there. I definitely want to comment a little bit about the Major Projects Office, what they had mentioned in the Canada Spring update, and then probably some macro thoughts too, because I listened to almost the whole Berkshire Hathaway um, annual meeting with Greg
Yeah.
Abel taking over from Warren Buffett. So some really good thoughts from there as well, just just kind of how they're seeing the world right now and how they're actually thinking about investing too.
Yeah, 100%. Okay. Well, do you want to kick me off with what you want to start us off with here?
Yeah, let's do employment payroll numbers. So Canada lost 18,000 jobs in April. Unemployment rate increased 20 basis points to 6.9%. Employment rate also decreased 10 basis point to 60.5. And that's been on a steady decline since 2023 when it peaked around 62%. So before I go on, there was a lot of good information in there, but just want to hear your thoughts on that.
I mean, like it seems like a continuation of a lot of the trends that we've seen over the last year. Uh, you know, public sector jobs up year over year, private sector jobs and self-employed down year over year. So I think we're just sort of like the government's spending money to suppress certain numbers, right? May or may not be their intention, but that's the result of policy. And we went from sort of post election hearing that we're going to see 30,000 layoffs in the public sector to and I think you are on sort of like the OpEx side. I think we talked about this last week,
Yeah.
right? It was like kind of
Mm-hmm.
just creative accounting, right? Like you're still creating jobs on the CapEx side and it just looks different on the budget because we're spending a lot on these special projects like you've discussed. So I think that this is where the question becomes like, are we genuinely trying to exercise kind of like, I don't want to use the word austerity, but are we trying to run a leaner budget um, and have an economy that is maybe more recessionary or are we trying to run like kind of the tail end of like anticipating that the cycle is going to be bad and we're running make work projects and all of these things and the unemployment numbers sort of look like reflect that to me. One of the things that I will often track with when it comes to unemployment is mortgage delinquencies, right? Like CBA puts out these numbers on a monthly basis. I'll see if I can screen share them here now, but basically you've got mortgage arrears in Canada track quite. Did I share the wrong tab? I think I shared the wrong tab. There we go. Mortgage arrears in Canada track quite tightly to unemployment, and so the question is like, are we? If you look at historical cycles, assuming that this is kind of going to play out like a historical cycle, unemployment continues to rise, and we get to a point where mortgage delinquencies um, rise with it, and then are we at the point where unemployment is rolling over? My guess is no, but I do think that the government is probably incentivized to keep unemployment lower, and it seems like they're willing to do what it takes to make that happen from the spending side. Not that they're trying to keep mortgage delinquencies low, and I think this will still probably see mortgage delinquencies climb until the end of this year. These trends obviously matter to me because that just illustrates how unemployment
Mm-hmm.
rolls into the housing market. So I'm curious to get your thoughts on like, is the
Yeah.
government is the government like being intentional to to kind of use the woo woo word about trying to keep unemployment uh, lower here?
Yeah, I mean, I think on the private sector side, I would agree with you. I think we're seeing some programs support to businesses that, especially the ones impacted by tariffs. It was interesting that release from Stats Canada, though. The private sector jobs looking on the last 12 months, those were up 91,000, self-employment down 55,000, and public sector essentially flat.
Yeah.
So those are interesting numbers, and for me, I think it's interesting perspective because I'm in Ottawa. So clearly, when
Hmm.
you're going to see impacts of the public sector, um, Ottawa is going to feel it a whole lot. And I think you're still not fully seeing the impact. So I know quite a few people in the public sector, quite a few people actually with departments that are being impacted by the layoffs. And for the most part, I think the way they're going about it is, first of all, trying to get some voluntary departures, people going for early retirement. So that's usually the first phase. But then if they have a group of, say, 50 employees and they want to get rid of 15 jobs within that group of 50 employees, essentially those 50 employees, once they've gone through the voluntary departure, then they go through a competition process where the 50 employees fight for 35 jobs. So that's
Yeah.
essentially how it is. So my understanding, again, I do know some people around me that are impacted by that. My understanding is that there's still a lot of them in the competition process. So I
Right.
think they've done the first phase and now they're kind of thinning out that last part. So I would assume this will probably be reflected in the job numbers probably in the next 6 months or so. So we might actually see a decline in public sector employment. I don't
Got
know
it.
for sure, but this is more anecdotal. But again, Ottawa being, a government town, it's definitely something that I do take notice of.
Yeah, 100%. For anybody watching, drop us a question in the chat on whatever platform you're on, and we can go from there. Um, yeah. So you think that we'll see further increase in the unemployment rate, so more job losses?
We'll have to see, right, in terms of the overall unemployment rate, especially because the fact that people are actively looking for jobs or not or give up, that will have an impact too. So we'll have to see there. But the public sector, I think it'll probably remain flat for a little bit or possibly decline, just based on what I've heard. Again, I'm not, this is more anecdotal, like I've said, but I've heard that from more than one person in various departments with the federal government. So it's not just isolated to one department here. And obviously, it'll vary depending on what the priorities are for the Carney government. Some departments are not being impacted whatsoever. I don't have any friends, or actually, I do have some friends in defense. I should reach out to them just to see how they are being impacted. I suspect that there's not many jobs that are being impacted in defense, just from seeing all the ads when I watch the Habs games in the Stanley Cup playoffs about joining the armed forces. So I would assume that that's not one of the part that's being impacted. But the other thing on the employment side, and I'd love to hear what you have to say about that. I think you're probably pretty passionate, but it's not looking good, for youth employment. So
No, yeah,
now,
yeah. Go ahead.
just between people between the age of 15 and 24, so the unemployment rate is 14.3%. And just for context, because the unemployment rate for that age group is typically higher than the broader
Hmm.
unemployment rate. So for context here, it was 10.8% on average between 2017 and 2019. And I think that's pretty good to keep that context because that was pre-pandemic. Obviously, pandemic times, everything got skewed a little bit, but 14.3, this is definitely on the higher end, and has me a little bit worried for the younger generation. I'll be very honest.
Yeah. Well, I mean, like, again, I'm not. I'm no good at stocks, right? So I interpret everything through a housing lens, and but when I
Yeah.
look at youth unemployment being where it is, those are your future home buyers. So, the idea, and so you've got, I mean, if you look at the population pyramid of Canada, I think we covered this like on the last one of the last shows, but if you have two major cohorts, right? You have your baby boomers who are net owners of lots of real estate, and then you have your millennials and Gen Zs who are net buyers of real estate because they're typically first-time home buyers. First-time home buyers are 50% of the purchase pool in real estate. Um, it doesn't reflect exceptionally positively on the idea that we are going to be trying to move 66% of the real estate as boomers retire, downsize, and decease to a generation that can't afford it on a price to income basis and also can't afford it on a employment basis. So I think that this is a very, very serious long-term headwind for the real estate market when I look at that great wealth transfer, which in Canada and the US is very much a great house transfer because we um, carry most of our assets in our primary residence. And I don't think a lot of people are thinking about it. And setting just that aside, like these are also your individuals who are most likely to be affected by AI replacing their jobs, like entry level careers.
Yeah.
They're your individuals who are going to have the hardest time, whose jobs are going to be most disproportionately impacted during layoffs because they typically will kind of carve out the bottom end. Um, it's a worrisome trend. I completely agree with you. Youth unemployment, and I'll finish with this. I was feeling optimistic because it actually improved quite a bit heading into seasonal hiring, and it was sort of correlated with the forefront of that trend of non-permanent residence numbers and temporary foreign workers leaving the country. And if that was the case, then you would assume that the correlation was okay. Well, non-permanent residents were giving up a lot of these, or temporary foreign workers were giving up a lot of these entry level jobs, and those jobs were now being filled by young people. And so it looked good, and that trend was exciting to me. And then it just completely reverted like within months, right? So like you can see it there. Like if you look at your youth
Yeah.
unemployment, it dropped for like basically the seasonal hiring period,
Yeah.
and it was mostly like purely Alberta jobs, and then it just came right back up. I mean, we're not back to where we were before, but give us another month, and I think it looks like we will be, right?
No, exactly. So it is something to keep an eye out for, definitely. And then when you're looking at the start of the year, 112,000 jobs lost. One thing we were talking about before coming on here is just full-time employment and part-time employment. So full-time employment fell 47,000 for April, while part-time employment was up 29,000. And that's always a worrying sign because the headline number may not look great, but for the most part, you can make an assumption here that a lot of these full-time employees, maybe they have to go and get part-time employment, but it's not out of choice, right? It's out of necessity. And the U.S. is seeing the same kind of trend as well. So the U.S. numbers also came in 150,000 jobs gained in April, although I assume it will be revised at some point. Unemployment rate is unchanged at 4.3%. But one key point in the release is that the number of people employed part-time but would rather work full-time increased by 445,000 in April to 4.9 million. So I think those are already like always important to look at because it doesn't, it's not all jobs are created equal, and these headline numbers oftentimes they just treat all jobs like they're the same.
Yeah, yeah. And you mentioned like there was a data point that sort of illustrates that like most people would be underemployed, right? If they're getting these part-time jobs, like people, it's not like people want that. They're doing it. And the other phenomena is, and there was, I think the number kind of reverted, but in the US, you can see like there's a huge instance of people working two jobs, which is probably, it increases your employment number of jobs relative to employees, but it is not a positive signal for the economy if if people have to work two jobs to make ends meet.
Well, yeah, and they're not as well paid on the first end. You also tend to not have the same kind of benefits when you're a part-time employee. Obviously, that's more impactful in the U.S. where health insurance is a big thing. But even in Canada, some of the basic benefits you just don't get when you're a part-time employee. I've had some experience working in HR, and you just don't. So some employers will offer some benefits to part-time employees, but most of them they either have no or very poor benefits compared to the full-time employees.
Yeah. I guess that Did you check hours worked? I actually forgot to check it on the most recent one, but
No, I didn't. I forgot to check it as well.
yeah,
Yeah.
yeah. I'll see if I can pull it up. In the meantime, somebody did ask us a question on Instagram. It said, like, do I really believe in CMHC MLI Select deals? Seems expensive and probably over leveraging and dangerous. So we can use that maybe to pivot to the spring economic update and some of the changes that might
Sure.
be happening to those CMHC programs. But also, so I'll just quickly cover sort of what this is. Like
Yeah.
I've said for a long time that the like using CMHC MLI is basically like it's like a bond trade, right? Like you're functionally a bond trader who's using real estate to go levered long on interest rates not going massively up over the long period of time. Um,
You want to explain
if
how MLI works, though, for
Yeah,
people who are not familiar with it?
yeah. So basically, you get debt that's insured by CMHC. You get it through like to any of your typical lenders will do these types of deals, but you can get a 90 to 95% loan to value. You're not seeing a lot of people doing that. A lot of people are like 85, 90, but you can get up to 90, 95% loan to value. So 5% down, right? 20x levered position. You can get a 50-year amortization, so that buys down your cash flows or buys down your debt service cost, which increases your cash flows. And you can get approved with just a 1.1 debt service coverage ratio, which is like very lean cash flow positivity, right? You're only 10% cash flow positive above your debt service coverage ratio or debt service coverage after all the rest of your costs. So very, very thin margins, super risky deals. They're, I've never indicated that these were safe plays, right? But a lot of people are doing them because they believe that rents are going to go up, which isn't the case right now. Vacancies are going to fall, which also isn't the case right now, or valuations are going to go up, which also isn't the case right now. But people are buying them on a very long term timeline. So, do I think that they are? Or the question that they ask is, do I really believe in it? For the right deal, I think it's a good program as long as the investor. So for the right deal and for the right investor, I certainly think that they can be good deals. The unfortunate reality is, in my lens, we don't have a lot of those good and those those types of investors in Canadian real estate. And so I would say at the margin, if you apply it to the marginal buyer, I think it is, yeah, it's totally dangerous. But here we are, and this is Canada. Canadians, I think, have indicated that we cannot be trusted with crazy debt programs.
Yeah,
What do you
I
think?
mean, yeah, like I think, well, clearly it worked until it didn't, right?
Yeah,
So it
yeah,
worked for
100%.
decades, and then now people are, I think, are faced with reality. And I was showing, just because you were talking about rents that are falling. I mean, you know this better than I do, but just looking at rental.ca, the May 2026 rent report, and pretty much every single province is falling except those that had cheap rents to begin with, is pretty much the trend I'm
Yeah,
going. Yeah.
yeah. Basically, places where rents were not affordable have returned to the affordability, right? And house
Mm-hmm.
prices have been doing the same thing. Like if you're 9x price to income, your market is going to get closer to that four to 5x price to income, and it's not has nothing to do with the market. That's where lenders will approve deals. It's not to say that Toronto will end up back at 4 to 5x or Vancouver, because they probably won't. Historically, they've traded in kind of like your 5 to 6, 6 to 7x income, because there's wealth effect. People have equity. People are borrowing money from their parents, getting cosigns, whatever. But yeah, so I would say that is very much a thing worth thinking about when we're um, when we're evaluating deals like this, right? Things are all of the inputs in your economic model of a deal are not going in the direction that you want them to go.
Yeah, so in the economic spring report, like what else in terms of housing initiatives did you see in there?
So I thought there was a couple of interesting like narrative violations, maybe. Like they mentioned housing affordability. I'm gonna try and pull up the charts here. But like housing affordability was improving as a result of let me just find it here, as a result of house prices going down. Let me see if I can find it. Um, and then they also kind of cheered, like they're giving themselves pats on the back for, so house prices, population growth, so like demand going away. I can't find all the charts here to pull up. There we go. So yeah, they show house prices have declined, rental affordability is improving, and these are just market forces, right? Like
Yeah,
they,
totally.
but yeah, so there's that. There we go. So existing home prices have declined. Like it was less than a year ago that multiple politicians said that they didn't want to see house prices decline, right? That like I'm not. That's correct. Yeah, that
Oh
happened.
yeah, like well,
Yeah,
remember that infamous Trudeau interview where he
yeah,
essentially admitted that they couldn't let home prices go down, and didn't Trump say the same thing in the fall
yeah.
or something where they? I mean, it is the reality that politicians are fighting, right? Like, do you want to piss off the cohort that has the highest
Voter
turn
turnout.
voter
Yeah.
turnout exactly?
Yeah, I mean, why
Um,
would they make policies for young people? Like, young people have proven that they're not a threat to politicians. Like, we in Canada, you have record levels of young people yelling on the internet about politics in the last election, and yet we had a voter turnout that was up ever so slightly. Like, young people could have decided the outcome of the last election, and they chose not to.
Yeah, I mean, I on the one hand, I it's hard to blame them because they they feel like whatever they do probably won't have an impact. But on the other hand, if they would
That's
turn
kind of
out more,
the death of
yeah,
democracy, though. If people are apathetic, right?
yeah, exactly. So no, that's yeah, that's definitely something. I'm just looking at my mic here. My mic is a bit low, but I feel like I have it. I don't
Yeah,
want
I
the
can hear you
gain to
fine.
be. Okay,
I
yeah.
can hear you.
So sorry about that, Ilya. I'll do my best. Maybe talk a little bit closer. These mics are notoriously low. But in terms of the spring update too, I had some pretty interesting takeaways. I was looking more focusing on the major project office. Did you look at that one a little bit or?
Yeah, yeah. There's some. I mean,
Mm-hmm.
like they obviously intend to spend a ton of money on infrastructure. Carney loves
Mm-hmm.
infrastructure. He's got homies in infrastructure. Like, I mean, it's a logical direction to take things. We need it. You go back to any historic recession. I mean, even before the election, like both Pierre and Carney were proposing deficits that indicated that they believed that we were in economic trouble, right? And that we would need to spend money to stimulate Canada's economy. If they do that, then that should ideally create economic growth. Will it be enough to offset any contraction in GDP that we might see as a result of oil price spike, etc.? And I feel like my oil price spike thoughts are kind of different too right now, which we can chat a little bit about. But like, can they outspend um, ec- any risk of economic contraction? I don't know what you think.
Yeah, I mean it's hard to say at this point. I think the approach they're really obviously they're highlighting the amount of jobs that could be created with these major projects. So I'm just showing here some of the 15 projects that have been referred so far. Whether it actually means that they're going to see the light of day, will have to see, but it represents 125 billion investment, and they are saying it could create up to 60,000 jobs. So clearly, that's been a big focus of them. Probably the same kind of focus if the Conservatives would be in power right now. And what's really I find interesting, but I don't think this will be just for Canada, is those like what they call, I don't know if you saw the transformative strategies. So there's like five major area here. So
Yeah.
the Alta Hawaii Speed Rail, so the Ontario Quebec corridor, the critical mineral strategy. So this one's really interesting because it's definitely putting an emphasis on Canada being more self-sufficient and having some secure supply chains. So that is a theme that I think we'll see more and more in years to come, and not just for Canada. We're clearly seeing the U.S. do the exact same thing to be more self-sufficient themselves with their supply chains. So it's nothing really new. And with the oil shock that we're seeing, I think more countries will be looking to do that. This, at least for Canada, the situation we're in is quite good because for the most part we have access to those critical minerals. It's really just developing the infrastructure to be able to access those. And the Northwest Critical Conservation Corridor, that one seems to be really focused on You have northwestern BC, southern Yukon, because there are a lot of minerals in those areas. But my understanding is there's just definitely not the infrastructure in place to go and extract those minerals. So I think they're wanting to invest in that. Pathway Plus. So even with the announcement of the Canada Strong Fund, I think you're seeing the Carney government really being different from the Trudeau government on that point, where I think they're starting. My impression, and maybe I could be wrong, is that they are just doing um, in almost an energy strategy, not renewable energy, not a transition energy. I think they're not saying no to any forms of energy, but they're also realizing that conventional energy is important. And they had that wording in the Canada Strong Fund update as well.
Yeah. I think it's like they have sort of just realized that it's kind of foolish to ignore it. Like it's great when I mean, I think we have real economic problems, right? And this, like, you see this on an individual basis as well. Like, it's fun to invent new like enemies when we don't have them. You know, like it feels virtuous to like pick these like you know ESG or whatever when like we don't have like other problems that we are facing that we ought to be solving. Um, and so I think that they certainly did that with like those things. But now we have like I think other things like you have trade war, you have oil price shocks, you have real things that are making it challenging for um, Canadians to be able to afford to live and all these other things. If that's where we're at, then we should face those problems and using the energy that is necessary to accomplish those goals is going to be the prudent strategy. So, I mean, like look at data centers. I think we pulled this up in one of the last episodes, but I'll pull up this article from the Logic. But um, they like most of the data centers in Canada are, or most of the data center growth in Canada is it is in Alberta, right? And
Mm-hmm.
a lot of that's because they're basically flaring natural gas, and it's like the cheapest place that they can generate electricity to to power these things. This is like it's a good thing because we're getting exposure to one of the fastest growing industries in the world, but it's a bad thing from the ESG lens of policymakers who otherwise wanted a different outcome. I think it's kind of just it's going to be a necessary evil, and it's just sort of a joke when you compare it to like it's a drop in the bucket when we're like talking about how we admire the economic progress of China and all of these things. It's like, well, who consumes the most coal energy out of like it's like
Yeah.
literally it's like the next 10 on the list combined, right? So it's sort of
Mm-hmm.
like it doesn't matter what Canada. I think what Canada can do is like protect our forests so that we can absorb as much carbon as possible. If that like that to me is just as meaningful as trying to consume less of it.
Yeah, I mean, I think
Supply and
China they
demand.
just want energy and independence, right? They don't care where it comes from, so they'll go whatever is easiest to achieve it. Joe had a comment that there's a lot of talking points and press conferences from the liberal governments. I mean, that's a fair criticism, but I think we also have to give them a chance to see which projects will actually happen, if any, of course. But I think just the fact that Guilbeault resigned in the fall is probably an indication that they are serious about this. Again, well, the proof will be in the pudding, whether these projects actually see the light of day. But it does seem like, to me, Carney is definitely a pragmatic, and I don't think he's stupid. He definitely sees that there's a need for this, and the benefit of it is some of these projects going through, it's going to create some jobs and probably reflect well on the government too. And then you also have the fact that they're starting to recognize the importance of the Arctic. And again, I think it seems to be a policy that is more targeted now on overall energy and not just renewable energy. So I think that's probably a good pivot that they've made. But again, we'll have to see whether these projects actually come through. They've only been in power for a year, so we'll see in 3 years from now what is actually happening.
Um, did you see all the tweets on? Um, oh, where I can't. I gotta undo the share here. Did you see all the tweets on Texas being like the leader in renewable energy right now?
No, I didn't see that. What's it about?
It's just I'll see if I can find it. But basically, like in the U.S., like so easy way to think about it in the context of the conversation that we're having right now is like people hear that um, California is so ESG and they want to develop all this renewable energy, but like Texas is just capitalism and like they're pro money and they're anti um, things getting in the way. Housing too, right? It's
Hmm.
funny. Like you get California versus Texas is such an easy comparison and contrast to make. So California talks a big game about all of these initiatives, ESG, affordable housing, whatever. Texas has built the most housing, therefore has the most affordable rents, and has built the most renewable energy, therefore has the most renewable energy production. And it's because they're just they there's no red tape, that they're efficient and pragmatic capitalist system, right? So I think that this is funny. Like if they know that it's one way to get electricity and that it monetizes well, they're just going to do it, right? And you don't need to
Yeah.
sit there and talk. And so I hope that uh, Canada is going in that direction where we're kind of past the point of talking about it in press conferences like Joe's
Hmm.
mentioning, and more like let's actually just do some stuff. Because if we don't, I mean, they're not they it's not hard for them to not win the next election if it's just another 4 years of liberal promises that get broken and people are oh, this was the exact same thing. Like they do have to produce results, I think, to win.
Yeah, I think so too, because they don't have any excuses now, right? Like they have the majority, so they don't have any excuse to say, well, we were a minority government, we got some roadblocks from other parties, we could have done it if we were a majority. Now they actually have to execute. So whether they do or not, and I know a lot of people just say it's the same government than it was prior with Trudeau, but the reality is they aren't. I mean, at least the way they're talking is definitely different than the Trudeau government. So we'll have to see, but um, so maybe tying that in a little bit on I think we wanted to touch on the monetary policy report. I think we had talked about it a little bit last week, but the Bank of Canada was interesting how they're forecasting oil to be what, around $90 a barrel in Q2 of 2026 and 75 in 2027, and just the potential range of outcomes if that pricing, if that oil price is not
Mm-hmm.
stays higher for longer. It'll be interesting what actually happens. I don't know if you have any thoughts on that.
Yeah, so my thoughts have kind of been revised because I looked back at a lot of the cycles that we've referenced in previous shows, and I've sort of concluded that where we're at right now, like it really depends on the magnitude of the elevation of the price, right? Like if we go to 120, then I think that that's probably going to give the scenario that you and I discussed in the first episode of the lives, where you get an oil price spike, demand destruction, prices blow off, and because people can't afford to buy stuff. If you're at like 120, right? We're at 95 right now. I think you say like 95, 100.
Yeah,
I mean,
yeah,
oil would
it's a.
have to get to
Mhm.
like, yeah, I think oil would have to get higher than I originally anticipated. Like kind of when I actually took the time to model it out. Like 120 to 150 range to like be unabsorbable by the consumer. So if you end up in like that 90 to 120 range and the consumer can actually continue to absorb the costs of inflation, that cost push inflation, then you actually end up with a sticky inflation scenario and like stagflation. I mean, neither outcome is good, by the way. Like, those being the two outcomes, like you basically get either stagflation or you get a recession. Um, I think politicians and central banks would probably prefer a recession over inflation or stagflation, but uh, that's what kind of interested me about their model, because it looks like they expect inflation to kind of stay in the 3% range now until next year, and that I don't know, like that kind of traps the Fed, if inflation stays there.
Well, I mean,
Not
weren't they saying
yeah.
it was going to peak around 3% and then slowly come down to 2% next year?
Yeah,
Yeah.
yeah, exactly. But it'll get to 2% by next year, which still means you're running 3%
Yeah.
for a year, which is it's a 50% higher rate of growth than what people were used to, and people were already yelling about inflation because they interpret cumulative inflation, right? Like your average consumer
Mhm.
doesn't think about how much did this cost me a year ago. they compare it to the price that they've benchmarked that product at in their head from like 5 years ago in COVID, and they're like, oh, a banana, maybe not a banana, but like, whatever grocery item is 50% more than it was that period of time. A tank of gas is now, $200 versus 100 that I was paying X amount of time ago. And so this is why people are yelling about cumulative inflation. They don't realize it. They think they're yelling about annual inflation, but they're yelling about cumulative inflation. So, yeah.
Yeah. And what's interesting too is like as high as oil prices feel right now, or gas prices, on a real basis, I mean, it's not that high, right? When you adjust them for inflation. I know it's been a shock because we were used to those lower prices, but it is nowhere near where it was. I think, what was it when it last peaked? Was it 2013, or no, it would have been before the GFC, right? The last peak.
Yeah, there was a peak before the
Yeah.
GFC. Oh, there's always a peak before, a
Oh,
major, major recession. But was that the straw that broke the camel's back in the GFC? Probably not, right?
no, exactly. And it's just, it was also interesting in that monetary policy report how they're saying that Canada is definitely better placed than a lot of countries to deal with that oil shock. There's kind of two ways to look at it. Consumer and businesses will face higher fuel and input costs, and they're already stressed to some extent, especially consumers, but national income should see a boost in energy sector revenues, taxes, and then it may support even some investments. And then we saw, I don't know if you saw that, Dan. I know it's not something you look at as close as I do, but um, whether it's a sign of things to come or not, last week we saw Shell announce an agreement to acquire ARC Resources, so getting
Mm-hmm.
some access to natural gas in BC and Alberta. So something, is it a sign of things to come? It could be also a sign that the federal government is more open to just allowing investments in the oil and gas sector, where I think in the past it was very difficult under the Trudeau government.
Yeah, I mean, look, super necessary things for Canada's economy to do even remotely well during what we're seeing right now. I hope that we keep progressing in this direction. I mean, like everything is. These are all things that I'm a fan of. Did you see the interview with like Toby Lutka on? I don't know what podcast he was on, but he was talking about like TDS, but also like
I
just
saw
like
that he
how
mentioned
we're
the
diversity.
TDS,
Yeah,
but I didn't see the
yeah,
full
yeah.
interview.
The rest of the video is really good, right? It's like we're these are all things like a lot of the things that are happening right now politically. Like it's hard to disagree with diversifying Canada's economy, spending money on capital projects that are good. I mean, hopefully we actually see results delivered, and this grows Canada's economy because I mean this is going to set us up for decades of success if it's executed properly, right? Like, highways and rail to the right places to extract our resources to, I mean, you look at like the Ring of Fire or like, I mean, fertilizer is another huge thing. Like
Yeah.
we're,
Oh yeah.
as a result of like, this is one of the commodity trade things that gets discounted when you're talking about Iran, but like there's a huge fertilizer impact. Well, who's well positioned to take that over? I mean, we are very well positioned to benefit and succeed from a lot of the geopolitics that's happening right now. Uh, it's an important moment to capture. So I hope they do it.
Yeah, and look, as hard, as difficult as it may have been to invest in natural resources with the Trudeau government, I think a lot of people forget right now, especially those who really hated the Trudeau government. And, I can understand why. I'm not going to push back against that. But the reality is, Canada is in a place where if you have foreign investments, there are worse places to invest than Canada right now. Sure, you do have some uncertainty when it comes to regulations and the government, although the government has been saying the right things, whether they execute or not, we'll have to see. But you're away from a whole lot from all of these conflicts. So if you want to do some foreign investments, there are worse places to invest than Canada. Sure, you have the US, but again, we have the midterms coming up. Maybe the Democrats will be in office as, will win the presidential race in 2.5 years from now. There's a lot of uncertainty in the US as well. So I would actually argue that there's probably a bit more certainty on the Canadian side of things in terms of making those investments, having those resources. So I think Canada is very well positioned. Europe is a bit of a shit show, so I mean, I don't know why you'd really want to invest in Europe right now. So I mean, I don't know what your thoughts are on that, but I think it is something that people are really underestimating. I think a lot of commentary on Canada was done with the lens of what happened in the last 10 years versus the current reality where I think you're getting these geopolitical forces and it can really, can really play to the benefit of Canada.
Yeah, totally agree. And I think naturally you also just see what you would call like a flight to quality during during like periods of geopolitical turmoil. And so I think that Canada, I mean, it's so easy for Canadians to like think about this as if it's not true, but the reality is that Canada is a stable economy. It's a safe place for capital. It is a I mean we're comparing our lived experience as Canadians, the ones who are critical of what's happening, which I'm certainly one of them. Like
Mm.
um, we're comparing that lived experience to what we've experienced in our country and from our country over the last whatever 5 to 10 years, what we remember it being like, and obviously it has certainly changed. But if you travel around the world, I mean, people who I think really say Canada sucks have not spent enough time outside of Canada, right? Like, and I think that global capital knows this. People who, typically global capital is, very wealthy individuals. That money's still flowing here. Why? Because they've been to all of the other places and they realize that Canada does have something that a lot of other places don't. And so I would say that my expectation is that we'll probably see continued increase in foreign direct investment in Canada over the coming years. Hopefully, in more diverse. It's so funny too, right? Because you'll see like I'll post a chart of like I just post data, right? Like I don't even really
Yeah.
put a narrative on it, but I'll post a chart that says like foreign direct investment contracted massively, right? And then and people are like, oh, Carney's scaring away investors,
Yeah.
and it's like okay, and then I'll post another chart that says foreign direct investment just jumped up massively, and they're like, oh well, Carney's selling the country off to foreign investors, and I'm like, well, which one? Like it's just the cognitive dissonance between, and it's
Yeah.
like not just the right that does it, it's the left that does it as well, right?
Mm.
It's like, oh, we don't like can't elect Trump because of crony capitalism, and then it's like, well, Carney's super well connected, so we should elect him. It's like, okay. Anyway, I just think I would say that I would argue that foreign direct investment will probably is probably something that's really worth watching, and then I think money flowing into capital and growing
Mm.
money flowing into Canada and growing Canada's economy should do should do well over the next little bit.
Yeah, yeah, no, definitely. I mean, just thinking about it, right? The easy example, and this is just like an obvious one, but you don't just Google what's happening in terms of investments in Dubai right now. And Dubai was really the financial capital in the Middle East. It's not like people are fighting to invest in Dubai right now. And that's just an example. Obviously, that's really a hot war that's going on and off. Whoever, like, who knows what's going to be happening when you're listening to this, if it's a recording. But that's just an example of the extra uncertainty that will probably make investors think twice of investing in certain regions. So that's just something I wanted to point out. Any comments on that? And I can just mention a few takeaways from the Berkshire Hathaway meeting.
Yeah, do it.
Yeah,
I'm curious.
before.
I know your
Yeah,
guys'
so
cash pile videos are getting a lot
yeah,
of attention. So
yeah, the cash pile, which grew to close to 400 billion. It's funny, some of the comments that we got from those videos were, a lot of people are just saying that Buffett has lost it, Berkshire has lost it. They are just sitting on cash, not doing anything. But really, what they're saying during that meeting is, it is a very uh, I wouldn't say these are my own words, but a bit of a volatile environment. You're seeing some change in shifts with tariffs, war, energy, very high valuation in the markets, and liquidity. They think is really a competitive advantage. So having that liquidity, and I mean, you can make that parallel too in Canada, right? If you're looking to buy real estate, having liquidity right now is probably it's probably a pretty good thing. They're obviously looking at bigger picture things, but if you're liquid and you're flexible on what you're purchasing, you tell me, Dan, but I feel like you can have some pretty good deals right now.
Yeah, I mean, I think on within the asset class that we're paying attention to, I think that there is some opportunity. I wouldn't say like there. It really depends where you're looking, and I think most people are still interpreting further downside risk on the housing asset class, which is probably correct. Um, so there, nobody's in a rush to go and catch the falling knife, right? Um, I would say, you know, I don't know. When I look at Buffett, it's like, people are like, oh yeah, they were sitting on all this cash. Like, look at the return that they could have made had they, put it in whatever thing. Like, what was the opportunity cost? It's like, well, they still made, exceptional returns on all of the other capital that they had allocated. Like,
Mhm.
it was the the assumption is that they made it like they had a cost, they ran the cost benefit that they stood to benefit more from waiting, you know,
Yeah.
and that they'll get better deals because they're not like I don't think that Berkshire, and I think real estate investors are very similar, the good ones. I don't think most people care what happened in a 1 year period when they had a record cash pile. When they're buying the next asset and they're waiting for an exceptionally good price and terms. Like it's not just price, especially it's like, am I buying it at a good rate of return on the price that I'm paying on that day? Is it sensible relative to the debt that I'm using, etc. They're buying it for 20 to 30 years, so this would be an indication that they feel that there will be, or that at least for that cash that they're sitting on, there probably will be better deals ahead. And I would say that the depending on the asset class, this appears to be true.
Hmm. Yeah, and you have to keep in mind too with a company as large as Berkshire, they may see some small deals, but sometimes the small deals they just don't move enough the needle for them. So a billion or two may not be worthwhile. Sometimes you also get into the percentage that they can own from a company without being the actual owner. That's why they'll usually stay under 10% of like that 10% threshold in the US. But it was also interesting for Berkshire to, they did talk about tariffs and geopolitical risks, and it is creating some pressure on rising input costs. They're managing their businesses well. They're not making any rash decision on it. The subsidiaries are working through prices, contracts, and customer relationship. They think things will, over time, leveled themselves out. But higher energy prices, and that was interesting. It's definitely a negative for obviously energy costs pressuring consumers. They actually have clients that are large retailers saying that they are seeing consumers make tough spending choices. But what's really interesting, and for a more macro look, is higher fuel costs because they own the NSF railway is actually a big tailwind for the railway because railways are much more efficient energy wise than trucking, for example. So they're seeing a big tailwind from higher gas prices and higher energy costs because they're able to weather them more. Of course, it's going to increase their costs, but much less than you'd see versus trucking. And I assume that the Canadian railways here will probably see that same type of benefit. And it probably goes back, it ties in well to the spring update where I think the federal government is going to look to have better supply chains to the Arctic as well. So we'll have to see whether exactly how they'll be doing that. It's still some big picture lines, but railways, yeah, it's a big tailwinds for them right now.
Yeah. Um, what's your read on that? Like, is that gonna? I mean, are we kind of in an environment where that benefit is sustained over like I guess the foreseeable future until this geopolitical risk goes away, right?
Yeah, I would think so. I mean, if prices stay elevated, I mean, you can't do railway everywhere, let's be honest. Trucking still
Yeah.
has its place, even with higher costs, but clearly the risk for trucking gets way higher if the price stays elevated or goes even higher. And one other thing here, the AI, they touch about AI a little bit, and they do own some energy companies, and they were saying that data centers and hyperscalers are increasing demand for electricity. But Berkshire Hathaway Energy is already seeing this, and Greg Abel, who is Canadian by the way, working to get his American citizenship, um, they said that data center related demand will grow materially over the next 5 years. But one thing that I saw was really interesting is they don't want for their utilities to have customers and businesses subsidizing the grid upgrades for AI data centers. So if hyperscalers need the power, the infrastructure, they believe that they need to bear the full cost of upgrading that. They don't want those costs to be bared on the customer. And I think that's a really maybe a good point to finish on, and just want to know what you think about that. But the risk of AI and data center for rising energy costs, and how all of the population could quickly turn against these data centers, even if they create some jobs, if they start seeing their electricity bills really starting to increase, because you have in AI and data center, you probably have customers that are pretty inelastic when it comes to energy prices, right? Like if they need to pay a higher premium to make sure that they get that energy, they will. That electricity, they will. Where you and I, we have finite budgets, so there's just so much we'll be willing to pay for electricity, and nowadays it's pretty much a necessity.
Yeah, it's a good question. I mean, it makes you wonder if, like, there's a really strong bull case for, like, I guess is it Tesla, the solar shingles now, or did they put it in SpaceX AI? I can't remember, but
I don't know.
basically, yeah, yeah, it's all so confusing now. Like, even anyway, I won't get into it, but I felt for a long time that if we want to meaningfully develop r- real estate in Canada, especially because we have so much available rural property. Like there's so much land here, right? And it's not like everybody wants to live in an urban area. Like I understand that like the vast majority of the country is completely uninhabitable, but there are also that still leaves like the size of Europe that is inhabitable, and there's a bunch of land there that doesn't have water and sewer, and it doesn't have electricity. Well, how do you solve for that problem in an easy and meaningful way is on-site services, right? Private services. So you can go and develop a house with well and septic, but if you don't have electricity, you're still kind of screwed. As other technologies, so like the same way that you were talking about how um, the net benefit of rail over trucking as gas, like
As energy prices are rising, yeah.
yeah, exactly. Like,
Mhm.
gas prices go up, rail becomes more economical. I think the same thing will be true for like on-site electricity. Like people will just say, I'm going to pay, and I'm sure they'll have financing programs for stuff like this. And then you get, uh, you have Starlink, which allows you to have, and this isn't just a big Elon sales pitch, but like you have Starlink that allows you to get access to internet in rural areas.
Unpaid
Um,
promotion from
yeah,
that
but
here.
but then the interesting part is like um, Nvidia and I can't remember what other company they were talking about. I put a tweet out about it, but they're talking about basically allowing people to have like on-site development of or on-site data centers on their properties, right? So like you get like a little a server room on your property, and you could benefit from because like at a certain point they're gonna have to decentralize this, right? Like that you
Hmm.
centralizing it, um, it takes too much from the grid in one location, and then it does add competition to the market. And you've seen like people posting their electricity bills in the U.S. basically saying like if you're competing with some huge Nvidia data center around the corner, you're gonna see the cost. How do we hedge against that? Well, you decentralize the system and add it to somebody's house. And I think like Canada is a really interesting use case in that because, you know, more months of the year than not, we need heating for our houses, and these things produce a lot of heat and they consume a lot of electricity. We have a lot of electricity and a lot of need for heat. So, I don't know, it's an interesting thing to me that I think is going to be. I mean, the natural solution is build nuclear, build solar, build wind, build proper storage facilities, overload the grid, and it's not a problem anymore. But the US, outside of basically Texas, is not efficient at doing that. China is amazingly efficient because they have
Hmm.
an authoritarian regime and they do whatever they want.
Yeah.
Anyway, yeah, I don't know. What do you think?
Yeah, yeah. I mean, that's an interesting take. I hadn't really thought about it too much, but yeah, it could also mean that people who are self-sufficient in terms of energy, whether they produce sufficient solar power or geothermal, whatever it is, if they're able to, yeah, instead of reselling that to the utility, maybe they make use other way. It's no, it's an interesting one. The reason I was bringing up is, yeah, if governments are not be careful about that, and it's not just Canada, it's the U.S. too. These are the kind of things that can lead to the rise of populism and to the extreme to
Yeah.
the revolution. Like if people, electricity is a necessity in our society, right? So if you can't afford it, you're going to get a whole lot of pissed off people.
Yeah. Yeah, 100%. Yeah, no, I think fuel costs and food costs are like that too, and those are the two most
Yeah.
inflationary things right now, I think, right?
Mhm. Yeah.
Outside of yeah.
Any last things before we go
I
our separate ways? Yeah.
I don't think so. No, yeah, I think I'm good. I mean, this is a good chat. I always enjoy these, and I guess the only thing I'll say is anybody listening to this live, the recordings are going to be hosted on
Mm.
the Canadian Investor Podcast stream. I am one of the two hosts of the Canadian Real Estate Investor Podcast, and Simon is one of the two hosts of the Canadian Investor Podcast. We would love if you checked out the shows. Hit the subscribe button if you like the things that we were chatting about here, and we're going to keep doing these every single Friday until it starts failing, which probably hopefully is never. Hopefully it'll grow
No. Yeah.
indefinitely, and yeah, so thanks a lot for tuning in, and give us some stuff you want to hear us talk about in the
Yeah.
next couple of episodes. We're gonna do. I think we're hopefully gonna do AI with Braden for Toronto Tech Week.
Yeah.
But
At the end
once
of
we
the
get that
month.
logged
Yeah.
in, yeah,
Hmm.
cool.
Yeah, but if
Okay,
there are
amazing.
certain topics you want us to talk about, let us know. If not, we kind of try to talk about what's been happening in the news. Like this morning, the employment numbers came out, so that was pretty good timing on that. But if there's something else, even if it's a week or two old, or even a bit more, as long as we know a bit in advance, if it's something we're not as familiar, we'll do the research and talk about it.
100%. Amazing. Thanks, man. Have a great weekend.
You too.